So I think one of the big questions out there is what we're seeing with Alibaba, the scrutiny it's facing from Chinese officials. Is this sort of just the beginning of more to come?
Yeah, a lot of the scrutiny we're seeing in China right now, it's a reminder that there are political and social risks when investing in many of these regions. Of course, internationally, in emerging markets, and also specifically in China. The irony, though, is in the long run, these types of challenges are exactly the reason that emerging markets generally command a risk premium over developed markets like the US. Now, that hasn't really played out over the last decade, but investors who are able to basically ride out those types of risks and also grow with the businesses that are growing very rapidly there, they're able to take advantage of this. So in the short run, this is definitely a challenge. It's kind of a curveball. Unfortunately, we're seeing some of those regulatory hurdles here as well in the US. But in the long run, that's exactly why emerging market investors are rewarded.
So is this just the beginning of a wider shakeup? And by the way, this is not the first time we've seen the Chinese take these type of actions. It was just a couple of years ago where they went after Anbang, the insurance company, HNA, and really pushed those two Chinese multinational firms to scale back their U.S. portfolio. It actually resulted in HNA to sell some of its hotels that it owned here in New York. I'm just curious if we could see China once again do the same thing with these Chinese tech companies.
Yeah, it's not inconsistent with the tack they've taken in the past, like you mentioned. I guess the challenge with deciding whether or not this is actually a trend is that this one does seem to be fairly, somewhat politically motivated, to say the least. And also, you just don't know what's going to happen with some of the largest companies there that do have large financial and also social standing. So as of right now, it looks like they are targeting just, these companies due to size and also social importance. That we expect to continue. It's hard to predict from that which companies they may target in the future and what that means for, at the micro level for specific stocks. So right now it looks like, this is something that probably will continue. It's very much in line with what they've done in the past. It's hard to draw a long-term conclusion. I think for overall investors, especially US-based investors, they do have a much larger stake in China than they did in the past because of the inclusion of A shares. But that being said, it's still only 5% of the all-country world index. So while individual micro concerns like this are important, in the long run, it's still the reason that investing in emerging markets commands a risk premium and why investors should stay invested in those areas.
And who knows, maybe it actually gives light to some of the other companies that have found it, a bit more difficult to compete given the size, the sheer size and scale of Alibaba sort of dominating the digital landscape. But what do you also think this means for Jack Ma, James? I mean, he's not only the founder of Alibaba and Ant, but he's sort of seen as the ambassador for Chinese businesses, the second wealthiest person in China. Where does this leave him, given this pressure he's facing now from Chinese officials?
Yeah, so I can't speak to what it means for him specifically, but I think what it does highlight is a difference between the way we like to kind of paint stories in the US versus in China. In the US, I mean, generally speaking, the government has not gone after specific individuals, especially, the founders of large successful companies. They usually go after the companies themselves through, regulation and antitrust measures like we're seeing today. So I think it just highlights yet another political and social risk of large companies in China.
Right.
And it is just more consistent measures that we've seen over the last 5 to 10 years of how that government likes to crack down on some of these companies.
And James, just quickly, if it's not China where investors should look right now in the near term, where should they look? India, Brazil, Russia? What's the top trade?
Yeah, so the question is, around COVID-19, basically in the end, it looks like it's about 2 lost years of economic and global GDP growth. Right now, the current forecast, both economically speaking and for corporate earnings, are that by the end of 2021, we'll generally have bounced back. So both internationally and domestically, we're already seeing a broadening out of performance. So those areas, those sectors, and those countries that did really well, either during the middle of the pandemic or as soon as things start to open up, we're already seeing that shift a little bit into other areas. So in the US specifically, it's away from tech sectors, for instance, to sectors that were harder hit by COVID-19. And we think that'll probably continue into 2021. It's not going to happen smoothly because even with the vaccine, even with stimulus, there are a lot of fits and starts, and there are a lot of questions there. But we think that's the shift that'll take place over the next 2 years as economic growth returns to pre-COVID levels.
Shepard Smith here. Thanks for watching CNBC on YouTube.